Okay, hey guys, good morning. This is Demetrius again with Aquila Traders, and I'm doing a follow-up video here on our gold setup. We posted a gold trade idea yesterday to our traders group, our traders channel, and I'm going to follow back up and look at this because the reason we took this trade, this was an example of how to use the Fibonacci setup. Um, just to find good trade opportunities, entries, and exits. And so, what we did yesterday, this is the 4 hour chart on gold. And so, I've got this chart kind of zoomed out to see how we set up this trade. And so, we were using our Fibonacci tool back here on the 4 hour time frame, back here around January 11th, January 12th, when we made this big high on gold. So if I zoom out a little bit, what we did, and you can go back and watch the video from yesterday to see, from this point here, gold has been in kind of a downward trend. And so we've been kind of making this high, came down to this low, made another high, another low, and started to push back up. But when we did the Fibonacci here, one of the key areas that we're looking for, we mentioned this golden ratio. And so the golden ratio is the 61.8 level. And so what we've seen through, a lot of trial and error, and a lot of time just studying gold, is that a pattern that gold tends to follow with this 61.8, that golden ratio. And so from here, we did the Fibonacci from this area around January 11th and 12th to where it bottomed out down here. And as we can see, once we did that, if I move ourselves in time a little bit, let me take this off so I can drag. Okay, so this is what it would have looked like back around that time period when we did the Fibonacci here. So the golden ratio area is 61.8. And so what we would be looking for is to see how price is going to handle this 61.8. If it pushes above, it's a signal from the market that the price of gold wants to continue to go up further to test our next higher levels. If it does not push past that 61.8, then it says that the current trend, which in this case is a downward trend, is continuing, and you can expect gold to continue to sell. And so as I move forward here back to real life time, the trade entry that we saw was here. A couple of times gold tried to push up and test this 61.8. Right here, it pushed up and got rejected. It came up again to test it, got rejected. Came up a third time, a fourth time. So you can see several times that we failed to get above that 61.8 area, or at least to hold above it. But we definitely failed to get above that. But on yesterday, what happened was we finally got the price of gold to push up, and it came up above this 61.8 area and actually closed above there. So we had a 4 hour candle that closed above this 61.8 area. At that point, the trade idea was if gold pushed past that 61.8, it gave us a signal that it wants to buy. And so our trade setup is to then not to immediately jump into the trade, but to wait for the market to pull back, because once we push past the 61.8 area, the next thing to test is gold almost 80+% of the time is going to come back to test the 50 fib level. And so what we were waiting for, again, if you go back and look at that 4 hour video, we took our entry currently on this candle here. And I'm going to zoom in a little bit. My text is not going to move with it, but you can kind of get the picture. So as we took our entry here on this candle, the market made a huge push down. This was news. So for some of you who have had questions about, well, what is the impact of the news? What does the news do? News typically just brings the market to where it's supposed to be, but it does it a lot faster. So you can see this rise on gold. It took all of these 4 hour candles for it to rise up, and one single candle pushed the price all the way back down to our entry area. So we were waiting to get in at this 50 fib level here. And that's where we took our entries. And so overnight, you can see how this kind of played out. The market pushed up a little bit, showed a little bit of resistance, but we eventually pushed up and got up here to our target area. So if I zoom back out to get our screen the way it's supposed to be, this was our target area. So once we pass that 61.8, again, 80+% of the time, what we've seen happen with gold is that it is going to push up to at least the 78.6 or the 88 fib levels. And so this was our target area to exit this trade. We entered here. The price that we got in was approximately 2033. Let's see what this is. 2031. I did not get in all the way at the very bottom. My entry was somewhere around here, 2030, 2031, somewhere in that range. And so our target area was to exit when we came to this 88. And so we closed out the trade and took profits here at 2054, I believe it was. Okay. So the overall trade would have been from, let's just say 2030 2032. So we'll say where the 50 fib level was. So from 2032 up to 2055, that's a $22 move in gold. So depending on what your leverage is or what you choose to trade, that could have been a $22 profit trade. Could have been $220 or could have been $2,200. Just depending on how you scaled it up. The stop loss that we use on that, we had our stop loss just below this candle here, which was the last 4-hour candle that had selling activity before the move up. So our stop loss was down here. So our risk on this was between 2032 down to 2028. So we only had a $4 risk on there. So a $4 risk for a $22 gain, that's pretty good. I'll take that trade all day, every day. Okay. All right. So hopefully you guys can see how this is a good way to use the Fibonacci tool. And that's just one of the technical tools that's available, but it's one that we rely on a lot with gold and like to, play the setups on that with gold. So hopefully you enjoyed this video. Please like this video, drop any questions you have in here, subscribe to our channel so you can see these kind of updates as we get them posted. Okay. See you guys next time. Thanks.